to Aparna, the facilitator of this session. Also a big thank you to the panelists for attending. Welcome to day 3 of this 2020 International Conference on Inclusive Insurance, Digital Edition. Today we'll be talking about how to reach scale and develop insurance markets, and I'm looking forward to that first session today, which will be an interesting day, not because of important decisions in the US, but also because of very interesting content of these sessions. So Aparna, I hand over the microphone to you.
Great, thank you, Doug, so much. Again, good morning, good afternoon, everyone. Thank you so much for joining this session on integrated risk management solutions. As Doug mentioned, my name is Aparna Dalal. I work with the ILO's Impact Insurance Facility, and I will be the facilitator for the session today. So in today's session, we will take the discussion to risk management solutions that go beyond insurance. And we will look at how these solutions can be integrated. So when one thinks about risk, the most apparent solution is usually insurance. And many of the sessions during the conference, will focus on this risk management mechanism. By reducing the financial burden of shocks, insurance can enable low-income people to get out and stay out of poverty. But there are limitations to insurance as a solution. So to help households manage risk better, perhaps insurance can be offered as a menu within a broader range of financial services, such as perhaps savings, credit, remittances, money transfers, which collectively can then enable the working poor to better prepare for risks, manage risks, and cope with risks. But instead of a product menu, can such a solution be offered as an integrated solution? And this is what we have been testing with some of our partners in Asia over the last year and a half. We've been working with microfinance institutions, non-banking financial corporations, and savings and credit cooperatives to develop integrated risk management solutions that use savings as an anchor to build buffers which can then be utilized during the time of risks, and any additional burdens can be managed through insurance or other credit products if necessary. So we have actually on this panel 2 of our partners. So first we have Hilot, who is the Chief Executive Officer of Oro Integrated Cooperative in the Philippines, and Nikhil AC, who is the Head of Liability Products at Dvara KGFS in India. We also have the pleasure of having Sicco Gelder, who is the Director of Health Insurance with PharmAccess. And Sicco has been working in developing a digital integrated health management solution, which you will be talking about today as well. So having said this, before we get started, let's just quickly go through some housekeeping guidelines. So today's session is scheduled for 90 minutes, including a question and answer session. I will give a brief introduction, and then each of the panelists will present their experiences and cases. We will try to take some questions between panelists, depending on how we're doing on time, and then we'll save some time at the end for a more comprehensive Q&A session. To ensure the highest quality of experience, participants will be muted, but you can post questions through the Q&A feature, and we will try to answer as many of these questions as we can during this session. Please note that the session is being recorded and will be made available online. And if you have any technical issues, you can use the chat feature to message the Microinsurance Network executive team, which is one of the participants that you will see, and you can message them if you have any technical issues during the webinar. Okay, so this session, we have 2 financial service providers and 1 technical service provider, I guess. But it's really meant for any organization that's looking at providing insurance plus solutions. So let's maybe just do a quick poll to understand who the participants are and what type of organizations you represent. So that would give the panelists a better idea of how to share their experiences. So can we launch the poll now? So the question is, what kind of engagement do you represent? Insurance, industry, donor agencies, financial service providers, government and regulatory bodies, academic service providers, and others. Let's take a few seconds to Okay, so it looks like we have a fairly diverse group of participants, so that is fantastic. And hopefully the messages and experiences that you see and some of the lessons that they will share will resonate with you as well. And hopefully you can apply them in your own work after the session. All right, so just moving on to just kind of lay the context. So, as I said, we'll present the perspective of financial institutions such as MFIs and banks that are keen to help members better manage risks. And when we think of risks, we can think of them both as those that are imposed from the outside or those that are taken voluntarily in the pursuit of opportunities. We're also looking at both idiosyncratic and covariant risks. And when it comes to financial institutions, there is another classification of expenses, I would say, that while they're predictable and expected, often they can pose challenges, especially when risk events are attached to them. So we are classifying them as economic stresses, and many of the solutions that need to be developed actually need to factor these economic stresses as well. And it's well understood that different financial products can help manage risks differently, essentially based on the likelihood or probability of the risk happening, as well as the impact or cost of the risk. Savings is often the cheapest and most versatile product. And many of the solutions that you will see today is anchored on savings. And then builds on top of that other risk management or coping mechanisms. And savings, often is unsuitable for larger losses. And here you might need government benefits or relief when we're talking about especially large covariant risks with an impact that goes beyond the capacity of even financial service providers. Or you can think about opportunities for insurance as a more efficient and effective solution to manage these higher costs but lower probability risks. And credit can also come into the mix, especially when the risk may increase consumption costs for households. A credit product such as an emergency loan is probably or less attractive mechanism, rather, I should say, for a risk that affects income generating possibilities, because then there are challenges for repaying the loan. So what we'll see today is, again, a mix of different products that are integrated as one solution to manage different types of risks that households might be facing in these geographies. And another perspective that we will see is this idea of going beyond the coping strategies. How can we also include mechanisms for prevention and preparation, so that for risks we have better prevention and preparation stages, and effective preventive strategies can be employed in terms of how to accumulate buffers, and which could range from financial, physical, human, or social buffers. So thinking about a risk management framework that includes prevention, preparation, and coping as three mechanisms. So with that quick kind of context, I would now like to invite Renee to share the experiences of OIC from the Philippines in designing two savings-anchored integrated risk management products to help both clients, their members' ability to manage risks, but also to encourage or change savings and risk coping behaviors more broadly. So Renee, I will now put your presentation online so that you can start sharing. Just a second.
Good morning. Thank you, Aparna.
Yeah, just
Good
a
morning
second.
to all. Good morning to Sir Dirk and to all who are present in this webinar. I will be sharing to you our experience in the development of two products that is bundled with uh, bundled with bundled with insurance. So I will be sharing to you about integrated risk management solution. But before I proceed to my presentation, allow me to introduce my cooperative. Um, Oro Integrated Cooperative. We are located in Mindanao, Philippines. And for all you know, Mindanao is the second largest island in the Philippines. All three organizations I'm working with are present in Mindanao. The Philippines experience about 20 typhoons every year. The devastating Sindong and Pablo typhoons in 2012 and 2013 respectively are still fresh in the minds of the people. In fact, recently we are again hit by the typhoon Rolly, wherein most of the provinces in Luzon were really affected. And this year also in Mindanao, we have experienced several earthquakes as well. Currently, our impact uh, impact insurance partner is Climbs, no? Climbs General Insurance Cooperative that provides the insurance to the members, and they offer mandatory insurance bundled with credit and savings. For voluntary insurance, is also offered for the cooperative members. Next slide, please. So my cooperative is the first co-op, community type co-op in the region since 1966. It started with 88 pesos or $1.50 as the startup capital by 28 founding members. We are number 9 in terms of assets from among the 25,000 registered co-ops in the Philippines, and number 5 in terms of capital adequacy. We have 160,000 members served by 18 branches, and we have an asset of 5.7 billion or $114 million as of December 2019. So our services to our members are loans, savings, insurance, healthcare, and also bills payment. Next slide, please. So our product development, uh, our product development objectives are the following. When we develop the two products, to increase long-term savings deposit for the co-op and to provide assistance to members in managing risk, encourage members to use savings rather than taking loans for emergencies. Because usually, in our country, because we have so many type of loan products for all needs. So to counter this, we developed this product so that the members can use the savings rather than borrowings. Next slide, please. So how the project was started? We have made a partnership with Climbs, our insurance partner, and with the guidance of the international labor organizations. Um, the fellow from ILO helped us to conceptualize, to develop, and even doing the marketing program of the two products. Next slide, please. So the product design and methodology, or the process of how this product was made, we did the in-depth one-on-one interview with members, including focus group discussions. We interviewed the staff, and we asked questions about risk faced, coping mechanism, and also understanding the saving and credit behavior of the members. And eventually, the management team, composed of the management committee, do the brainstorming session facilitated by the fellow, ILO fellow, and we come up with the two products. Next slide, please. So, on the questions asked about risk, there are three risks mentioned: the health risk, the craft failure, because we have members, we have farmer members in the area, and also calamities. Now, when they ask about coping mechanism, the first is to borrow from the co-op, and also to borrow from the relatives. And when they ask also about savings, most savings are used for loan repayment. And this co-op through regular savings and also our share capital. In crisis, they prefer to take the loan for some, because, as I said, there are many members who are borrowing, not saving, and very low awareness on products offered to the members. Next slide, please. Now, talking about future risk, most members say that hospitalization expenses is a concern, especially in the Philippines. Our health system is not so good, and also most members also regard loss on account of calamities, typhoons, floods, as a concern. Now, when they ask also about insurance, most members of the cooperative have access to PhilHealth. PhilHealth is the national health system in the Philippines. And also mortuary insurance is provided as member benefit by the co-op. And some members have health and wellness program. It is a program, offered by Climbs. It is a hospitalization program that covers the entire family up to 21 years old, the sons and daughters. And also about their expectation, 85% of the respondent is or were interested in having the education savings plan, and 90% would be interested in saving plan for health purpose. Next slide, please. So when we develop the two products, the first one is this one, the Safe Plus. So this is for the co-op kid. This will be used for the college education. That's why, based on the salient features, So the purpose of this product, build for college fund to save for and secure your child's college cost, because in the Philippines, to study in college is very expensive, especially when you will be studying in private schools. Member depositor, and the nominee child is between 0 to 10 years old. And then withdrawals can be made when the child reaches 17 years old. And this is bundled with insurance product. It has free life insurance. Example, when the member died, no, within the depositing period, the total accumulated balance gets doubled up to 250,000 pesos. And it has 6% interest rate per annum, with a minimum savings of 6,000 and maximum of 60,000 per annum. And this is a long-term savings with a systematic withdrawal. The deposit term is 17 years, and the age of the child must not be higher than 10 years. So it has to wait for about 17 years, or when the child starts to study in college. The withdrawals is over 4 years and 2 installments per year. Next slide, please. Now, the second product is the health and disaster savings. Now, as I mentioned a while ago, Philippines has many disasters, no? Typhoon, earthquake, name it, and we have it. So that's why we need to incorporate in our products the insurance component. So we have this health and disaster, which previously we called it emergency savings. But right now we have improved it and bundled it with insurance. So the purpose of this product is to build fund for an emergency, to save for an emergency such as health, calamities, fire, earthquake, so volcanic eruption, typhoon, floods. So we all have that in the Philippines. And this insurance, this product has free calamity insurance when the total deposit reaches to 5,000 pesos, and 100% property damage due to natural calamity, which the member will receive 6,500 pesos or $130 plus 500 pesos health reimbursement due to peril. So this is free. So the member will not pay for this one. And it earns 5% per annum with a minimum savings of 6,000 pesos and maximum savings of 30,000 pesos. So we give a cap on this product because if we will not give maximum deposit, there are other members who are just hopping, in terms looking for a good investment because the rate is high. It is higher than our time deposit rate. And it is a long-term savings with withdrawals is only allowed when there is an emergency. And it has a minimum term of 5 years. Next slide, please. Next slide, please. So the product was launched in first week of March this year, 2020, a week before the national lockdown, because in the Philippines, the president declared lockdown starting on second week of March. So during the opening, we only have a limited number of members who availed. 30 health and disaster savings that collected 50,000 pesos, and 25 Safe Plus that collected 12,000 pesos. But on the first, so this is the feedback that we got from our members. After the pandemic has delayed the enrollment of product because the members actually their priorities is for their basic needs because of the lockdown. So the business is affected. Others have lost their job. So there are many concerned. But the members were excited about the bundled insurance, and members would like a higher cover of insurance for health and disaster because according to them 6,000 is only small amount. And members wanted fire to be included in the perils covered because it is excluded in the coverage, the fire. And for the latest update, it increased now from 30 to 420 on the health and disaster. It reached to 430,000. And for the Safe Plus, it increased to 380 and a total deposit of 385,000 pesos. So, but despite of that, the board of directors made an intervention on this. Effective November 2020, all staff and officers are mandatory to be enrolled with the health and disaster deposit. So the board wanted to be an example of this product. So we want to market it to the members, but we have to get it first, no? As we have to walk the talk in terms of insuring for calamities or for emergencies. Next slide, please. So these were the key learnings, no, on the development, on the enhancement of our products, and even on the marketing side. Member needs to be educated on the importance of long-term savings. If you ask about savings here on the short-term savings and the term deposit, so members actually are saving. In fact, our savings ratio to total asset is about 55%. So, but when we talk about long-term savings, only few are having that. And second, management should be persistent in pushing the product. And there should be a champion from among the team members as an advocate of savings consciousness and literacy, especially for the long-term savings. There should be a champion from the team. And product awareness amongst members is also a challenge. So we have noticed and we have discovered based on our interview, but that not all members are really aware of our savings products, especially for the long-term savings. And staff motivation paralleled with incentive plan will countervene the mañana habit of Filipinos. Mañana meaning later. If you have to campaign, the member would say later. So, but through the help of ILO fellow, we have developed an incentive program for the staff. This is the first time that we have developed, and thanks be to ILO for this product development. In both products developed, we are trying to ensure that members use their savings for expected expenses versus taking a loan, because if the member has deposit, so they will not pay any more interest. So they will just get the money, and they can get it anytime when there is calamity or there is an emergency happen in their family. And oftentimes, when product is bundled with insurance, the tendency is that member is not aware of the insurance component. So this is also a challenge because this is not a common in the Philippines. One product bundled with insurance, especially for the cooperative. So that's why we need to improve our marketing strategy, our marketing program, in terms of the cascading of this product, of the studio products. So our experience in the development and also in the marketing of this two new product, no, give us actually a challenge on improving our marketing program. It should be incorporated in the literacy program as part of the promotional program. So finally, next slide, please. So to end my presentation, I would like to share to this quote. No? Success is not final, failure is not fatal. It is the courage to continue that counts. Now, although the number that we got right now is far beyond our target, but we will not stop there. But we take our learning, no, as our encouragement to continue to educate our members so that eventually they will have savings, long-term savings that they can use in times of calamity and in times of emergencies. So that ends my presentation, and thank you and good afternoon. God bless us all. Daghang salamat.
Thank you, Rene, for that presentation. As we can see, it's the product actually was developed last year, but given the challenges with COVID right now, implementation has been challenging. But we've seen the value of such a product, and also, as Rene was saying, there is a need for a long-term commitment from the institution for such savings anchored products as well. So hopefully once the situation improves, we will be able to get back to the original plans that we had. We have a few questions for Rene, but I'll just maybe turn over to Nikhil now, and then maybe we can do a set of questions at the end, because just in the interest of time, if that's okay with everyone. So next, I would like to introduce Nikhil, who is with Dvara KGFS, and Nikhil has been leading the implementation of a new, again, integrated risk management solution that we've developed with Dvara KGFS over the last couple of years. And for those who are familiar with the microfinance industry, KGFS has always been a pioneer in trying to develop a more comprehensive wealth management approach for its members. And the solution that we've been working on fits well within that strategy. So Nikhil will present both the motivation behind the solution as well as the lessons and challenges that they face and what changes they are making as they've learned from this experience. So Nikhil, I'll just try to share his slides.
Thank you, Aparna.
You can just start. I'll just share a screen in a second.
Yeah. Good afternoon, good morning, all. So happy to be in this session. Yeah, thank you, Aparna. Thank you. So, yeah, I represent Dvara KGFS, Dvara Kshetriya Gramin Financial Services. We are a non-banking financial company based out of India. And India, specifically, we operate out of a state called Tamil Nadu, and the head office is in Chennai. So, first of all, I have put the company's mission. It's to maximize the financial well-being of every individual and every enterprise by providing complete access to financial services in remote rural India. So this mission statement itself proves what my company is, what we are aiming at. We are an 11-year-old company. We are in a 12th year of operations. Even though we come in the set of our group of NBFCs, we, as Aparna was saying, we do something different than the other NBFCs or MFIs. So that's what I'm going to talk about in the next slide. So the few things from this slide, what I want to highlight is it's like we are a rural-centric company. As our mission statement says that, okay, we want to upgrade the life of every individual and every enterprise and remote rural area. So we focus clearly on that, we call it as Tier 5 and Tier 6 towns, or rather at times we call it as villages of India. We want to provide all the financial services, be it a credit or an insurance or investments, and even remittances to the customers out there. Because we find that the customers in this remote rural areas are mostly neglected, even though they have the same goals, same requirements as people who are in an urban or a semi-urban area. Currently, we operate out of 6 states in India, and we have around 300 plus branches. We have an enrolled customer base of close to more than 1.1 million. And active customers means we have given loans, or the active loans of around 5 lakhs, that is 0.5 million, and our portfolio outstanding is around close to 1,000 crores in INR. So even though we operate in a remote rural area, we follow a strong technology platform. We give the best services to our customers and our staffs also, purely through the best technology available for servicing these customer folks. Can we go ahead, Aparna? Yeah. So why we have thought about a different saving solution for our customers? I'm happy to see that from the poll, we had around 42% of the participants attending this conference from insurance industry. Nice to see a good percentage of people from financial services industry also. So I'll come to that point why I'm highlighting that. So this particular project is purely intended towards well-being of the customers in terms of wealth management. So what we saw in the last 10 years or 11 years before we started this project is like we see that for a remote rural customer, whenever he need money, whenever he's badly in need of some money for any particular purpose, what he does is he runs behind loans, and that too in a remote rural area in India. These people does not have a consistent income, so it's a totally erratic income. Their requirements can come anytime, and they don't have savings at all. And whenever they need any money, they run behind loan. If at all they have some gold or something with them, they pledge that. If not, they even go to a pawnbroker and take that money because they have to meet their requirement. So it's all loans and loans and loans for these people. It can be a minimum of INR 5,000 rupees or a 2,000 rupees to maybe a lakh INR. But it's only loan what that particular person is looking at when he needs money. So what Dvara KGFS, my company, thought is, why can't these customers also save something out of whatever they are having? It's clear that these people will not be having a consistent income. So they might not be able to save it on a consistent manner, but they will have some excess, some surplus. We call it a surplus income. That is, people will have income, they'll have expenses on one side. So from the income and the expenses, there is at some point of time in a month, he or she will be having some surplus. And if we give some suitable tool for these customers for saving these particular surplus amount, that is going to definitely help them over a period of time in creating a kitty, which is going to help them when they badly need money. They can reduce their dependency on loans or running behind loans whenever they need money, and they can take the money from the surplus or from the savings what they have. So this is the thought process what the company had, my company had. So the project is oriented purely around this. So I would like to repeat, it is like we want to see all these remote rural people who does not have consistent income, saving whatever little surplus they have, and this surplus what they save should be able to help them in whenever they need the money. So the project, the products, the solution, whatever you call it, it revolves around these three important things. Can we go on? Yeah. So we at Dvara KGFS, we found that whatever we wanted to do on this saving solution, this will comprise of 4 building blocks as such. Okay. So it is plan, grow, protect, and diversify. We thought that, okay, these are the 4 building blocks around which all the wealth management solution should be. Plan, what is it? Like, yes, we understood that the customers who are in their early stages of their life, in terms of their the career, you call it as career, or their job, or when they've started working, at that particular point of time, they might not be having a sufficient regular income or money which is coming in, whatever you call it, but they would also like to save something. They will also have certain small time goals. So that is those particular set of customers who would like to initially plan something and immediately start small little savings. So that is one persona of customers. The second is the grow customers. They have done the basic savings for a certain period. Now they wanted to grow their savings in a big manner, which is going to help them in meeting their bigger goal. Another set of persona, what we saw is a set of customers, what we see is it's a protect customer. Yes, during their plan phase and the growth phase, they have saved certain money, or they've got certain savings. Now, it should be like their little savings or whatever savings they have got over a period of time, that should get protected. It should not be, I mean, they should not lose it because of any reason, like any unwanted things or any risk event which is happening to the entire family as such. So we need to protect that particular savings, and then at the same time provide them opportunity to do more savings. Another is a diversified customer. These customers have gone through this plan, grow and protect. Now they wanted to really wanted to do a bigger savings so that they will be able to meet their the larger goals in their life, the larger family goals. And whatever we speak here, whatever Dvara is doing, it is for the entire family as such. We are not going to consider, or we are not considered a particular individual and then developed a solution or done any product proposition, offered any product proposition for the particular individual. We always think that whatever the solution we offer, that should help the entire family to come up in terms of plan or a grow or a protect or a diversify. Yes, Aparna. So this is a new term which maybe you have been seeing for the first time, financial well-being report. Yeah, in my first slide, I mentioned that we have a total enrolled customer base of 1.1 million. And then I mentioned that we have got active loan customer base of 0.5 million. So what exactly it is? What is this difference? It's like, it's not that Dvara have some product, maybe in the loan products or so, which we just like that we wanted to give to any customer, or we will have customers coming to us asking, where they want loan or any other product, and we give any product what we have in our kitty. That is not the approach what Dvara follows. It's like what we do is we actually collect a lot of information from the customer in terms of like the family details, the household has assets, what the assets in the house, then the household income, then the household expenses also. This will help us in giving a proper recommendation by doing the proper allocation of the assets understand what is the insurance cover that particular family requires. And there are a slew of other things also which we understand by taking these lot of information like family details, household assets, household income, household expenses. And this in totality, we call it as financial well-being report of that particular individual, or it can be the FWR, financial well-being report of the household as such. So this gives us a holistic view of the client's financial profile. It will help us to get to go deep into that particular household, understand, engage with the clients, and give them the solution where we did not push any product as such. I mean, we can make the customer understand this is your situation, this is your family situation, this is which will help your household as such. And even we can even give a lot of other cross-selling products also, which is going to improve the lifestyle of the particular household. So this is what is financial well-being report, what Dvara KGFS follow. I think this is something exclusive with Dvara.
So Nikhil, sorry, just to interrupt, probably another 7 minutes or so, if you can.
Yes. So coming to the solution as such, what we have done is we have taken all this input from the financial well-being report and taken 5 key parameters like the income concentration, income volatility of the household surplus, liquid assets with the household is holding, and the credit history. Based on that, we are able to measure certain things like I've mentioned here, like income concentration will give how the income at the particular household is coming, like whether it is from a particular individual as such or from multiple people there in the household. This will help us to provide a better solution to the customer in terms of maybe if it is from a particular individual from the household, we need to cover that particular asset, that is the income of that particular individual asset. If it's from the diversified people from the household, then accordingly we'll be able to provide the solution. Then the income volatility, that is what type of occupation the particular person is having. Is he going to have a totally erratic income, or does the external factors impact his income a lot? So likewise, in terms of the liquid asset, if the certain amount of gold is there in the house, that will always help the customer in terms of liquidation. So credit history of the customer will help in giving a better credit product to the customer. So likewise, all these 5 parameters help us in giving a better solution for the customer. We did a market research to understand what type of solutions would the customer want, that is based on the income what they have and what is the surplus what they have. So our wealth management solution, we gave it a name called Dvara Sampurna Sampat Plan, that is DSSP we call it as. So under this, we found that there can be 2 categories of customers. There can be a set of customers who have got a minimal surplus and customers who have got some good amount of surplus who can go for a higher savings. So the people who have got a minimum surplus, we term them under a category called Dvara Dhana Shakti, and another set of customers who have got higher surplus income as Rajanidhi. Then based on our debt servicing capacity, the DSC of the customer, that is in terms of the surplus what he's going to have, the amount of service, the savings what he can do in a month, we segregated these customers into separate category, and under each category we offered different solutions with different products inside. So I'll come into the product immediately. Just Aparna, can you? So under the Dvara Sampurna Sampat Plan, yes, savings cannot go alone without a proper risk mitigation products. So there are 2 categories of products in the packages what we offer under DSSP. One is the savings products, another is the risk mitigation product or the insurance product. But we always selected those insurance product which is going to eat only minimum premium from the total savings where the customer is going to park on a monthly basis. So that was an important thing we always kept in mind when we selected any particular insurance or the savings product which for this DSSP offering as such. So under the savings offering, the first product is a gold SIP product. That is a gold systematic investment product which gives the option for the customer to invest in gold, that is buy bullion, that is being done at a back end with one of our another partner. So whatever amount customer invest in a month, of that a major portion will go to the gold portion, and over a period of time, that is this DSSP package is for 24 months now what we are running. So over a period of 24 months, the customer will be investing a good amount in gold, and depending on the appreciation of the gold or the variation in pricing of the gold, the customer is going to earn a good money in terms of gold savings at the end of the plan. Another product which we have in the under savings option, it is the money market mutual fund. Why money market mutual fund or liquid fund is, yes, we don't want the customer to take undue risk by investing in open market. So it's liquid funds will give the customer the security, the necessary security, where he will not lose the whatever capital what he's going to put. Under insurance, the risk mitigation product, currently we have 3 products. One is a hospi cash insurance. We understood that, yes, the small shocks, which the intermittent shocks in terms of hospitalization and all hits the family in a very bad manner. And at the same time, to give a solution which is with a very less premium, a product like a hospi cash, which definitely help. So this product gives the customer the security in terms of when he is getting hospitalized, be it any reason, even pregnancy is covered in this. So any reason for a particular day of hospitalization is going to get a certain amount paid. How we are looking at this and how we are telling the customer the benefit of this is like, yes, most of our 95% of our customers are daily wage earners. If they get hospitalized for a day, their daily wage is getting affected. So this product will help them in getting back the loss in wage. Next is the personal accident insurance, PAI, which gives a decent coverage at a very low premium. And another insurance product is a group term life insurance. This gives the customer a huge coverage that is depending on the goal of the customer. This is for the category of customer which I mentioned as Rajanidhi, that is people who have got extra surplus and more surplus, and they have larger goals and they have the capacity to save more. Yeah. So there is an algorithm which has been built into a system where the algorithm captures the output from the FWR, which I've told earlier. The output of the FWR is put into the system, and the system categorizes the customer into the plan, grow, protect, or diversify category. That is those 4 personas, and the algo recommends a product package. That is whether it should be more of gold, it should be less of gold, it should be more of insurance, less of mutual fund, whatever it is. And the algo calculates and gives the final benefit, what approximate benefit the customer is going to get after the 24 months period. Now, if the particular customer has got certain goal, and if the 24 months savings is not going to help the customer in meeting that goal, then if there is a deficit there, then the algo will automatically say that, okay, this is the shortage you're going to have at that particular time period, at the 24 months time, and the end of 24 months, and you can definitely go for a small credit product which is going to help you in meeting the goal. So here, not just the output from the FWR is used, and based on the persona, the package is being offered, but at the same time, it helps in picking the exact goal of the customer and providing him the exact solution which is going to help him in meeting the family goals. We did a pilot. We did the pilot in October 2019, and full rollout in the next subsequent months. And in the last one, we have completed 1 year of operations of this product. There are a lot of changes which we have made in the product based on the feedback which we got from the customers as well as our staffs. And now till October, we have offered this Dvara Sampurna Sampat plan to almost 19,000 customers. And gold AUM, the total investment in gold from this remote rural customers who have saved their little by little they have saved, and the total AUM stands at 2.6 crores INR. The way forward, what we want looking at is we want to integrate a better version of the algorithm into a system, offer new products which is going to help the customer in terms of savings or risk mitigation. Finally, before I close, I would like to tell you that in the last 1 year of operation, we see that the customers are willingly coming and investing in this. Even during the lockdown, or even during this tough period, people feel that, I mean, they have some certain money, excess money, surplus money with them, and there's a good tool for them to park that. And the happy thing, what I want to inform you is, it's like Dvara Sampurna Sampat Plan has won the 9th edition of ACEF Asian Leaders Forum Awards in the category Excellence in Rural Marketing. So this is the status of our product, and we wanted to take it forward in a much better manner. Thank you so much.
Great. Thank you so much, Nikhil, for sharing all the details, both in terms of the mechanics of the algorithm as well as the details on the products. So both Rene and Nikhil have talked a lot about this idea that financial institutions have to encourage more savings behaviors amongst their members. And now I would like to turn over to Sicco, who will actually present again a similar motivation from PharmAccess as well to encourage more digital savings actually for a health product that they pioneered in East Africa. So Sicco, I will just share your slides. And then...
Right, thank you, Aparna. Thank you for inviting me to this panel. While you bring up the slides, let me say that this presentation is about risks and risk solutions in health. And in health, there is, apart from the financial risks, which are obviously covered by insurance, there are other risks that also need to be taken into consideration. Now we're focusing on those others as well. Two in particular, one is systemic risk, so risk within the health system or health market, if you like, and the other is simply health risks that we need to deal with. Can I have next slide, please, Aparna? Okay, just before we go into that, very briefly, something about PharmAccess. I'm not assuming everyone knows who we are. We are a originally Dutch NGO working in health, in healthcare in Africa, in 4 countries, as you can see, across West and East Africa. And we look at improving healthcare markets. So that is really about looking at how the healthcare markets or systems, if you like, work to make sure that people who are poor or are now excluded from the health system can be included. Next one, please. And how do we do that? We do a number of approaches, and this is what I mean about the systemic risks. We do a number of things to actually improve health markets functioning. One is to provide access to financing, to credit, specifically for small and medium-sized health insurance providers. And traditionally, we've been doing this with local banks, introducing the banks and healthcare providers to each other, and making sure that the healthcare providers can obtain loans from local banks. This includes providing TA to the healthcare providers on their finances, on their administration, and on their business planning, but also guaranteeing loans for the banks. Secondly, what we'll be doing is health insurance. And in the past, we've been doing a lot of programs with insurance partners in the countries where we work, private insurance partners. Now we are focusing increasingly on working with public health insurance providers and helping them, supporting them towards their goals of becoming the main players in universal health coverage. We work on quality of care together with a number of partners. We developed a system of standards called Safe Care. These are standards that can be applied by anyone, but are specific to resource-poor settings. And these standards can be used to assess facilities, their clinical quality, and provide them with quality improvement plans. And finally, we do a lot of research analysis around all the programs and all the innovations that we do to make sure that we build up the proof of how they work, and to be able to promote them to our partners and to others to replicate and to scale, because that's what we do. We are a small organization ourselves. We don't do everything ourselves, but we want to create new ways of working, as well as real innovations that can be taken up by others. Increasingly, these innovations are digital ones. So we are using the technology that is there, mostly mobile technology, in Africa to create new models of affordable and accessible healthcare. So on the credit side, that means that we have been developing and rolling out digital cash advances. So these are cash advances based on the cash flow of clinics, which can be monitored through the mobile money systems and through other mobile wallets. On the health insurance side, this means creating and supporting and using digital and mobile platforms that tie the payers and the providers and the members of health insurance programs together. And I'll be talking a little bit more about one platform that we helped to create called MTIBA. We also use other platforms where that's appropriate. Sometimes they are the ones used by the insurer, sometimes they are open source. And on the quality improvement side, sorry, just want to finish on that one. On the quality insurance side, we've now fully digitized the Safe Care assessments and quality improvement plans, which means that assessments can be done much more quick, that quality improvement plans are created by the system itself and provided to the healthcare providers for their efforts and for their monitoring of quality improvement. Next slide, please. Can you run the video? That gives a bit more impression of what we do.
I'm just worried about the sound.
All right. No, this is the next slide. The video needs to run by itself.
Is there a link that we can link to?
No. Okay. Well, let's, in the interest of time, then skip this. Okay. The video was there to give a better overview of what we do. But can we have this slide? This isn't not the full slide, I think. Thanks very much. No, this, yeah, thank you. Okay, so that was about the systemic risks, where you can apply a number of approaches to actually make sure that the whole health market, whole health system starts working better by improving the access to finance, by improving the access to insurance, by improving the quality of care. What I want to talk to you about specifically is how mobile technology can help in insurance, in health insurance. Just quickly, as some of you may know, mobile phones are everywhere in Africa. There may be simple phones, right now, but it means that you have almost everyone connected from high to low within society. You have the ability for people to be reached, and not just by phone calls and by SMS, but also by mobile money. Next slide, please. So there's a development going on, and specifically one that started in Kenya and that has been developing ever since, where people started with mobile telephony, where they could exchange messages and phone calls, and they could prepay for that, towards mobile money, where people can actually store and exchange money across. In Kenya, that was done by Safaricom, and that has become known as M-Pesa, and I'm sure you are all aware of that. Now about 80% of Kenyans use M-Pesa, so it's a very, very well distributed and expanded system. And based on M-Pesa, we started experimenting with mobile wallets for health, whereby people are connected through the mobile to the payers, to money, and to the clinics. And this is a system which we call M-TIBA. Have a next slide, please. What M-TIBA does is that it is, apart from the mobile wallet, it's a health exchange. You have a situation, which is the one on the left, where you see a spaghetti of connections between payers on the left, healthcare providers on the right, and the individuals at the bottom. And that means that if you want to pay for healthcare, then it's either out of pocket, or it's this very complicated spaghetti of connections from payers to providers, often paper-based, highly inefficient. And what M-TIBA does with the mobile health wallet is that it allows all of that to be unified, so that payments from payers, whether they're government or they are insurers, employers, or they are private individuals, or even from donors, can go into people's health wallets, which they can use then to go to the facility of their choice to obtain their services there. Next slide, please. And what does that do for financial products? If you look at this little diagram, it shows, let's say, an evolution of health financing that runs from out of pocket, which is cash, obviously, out of pocket payments, and which is a bane of many poor people in Africa, but also elsewhere, to out of pocket, which is a mobile payment through mobile money. And then you have a number of these other forms of financing which can now be offered through M-TIBA and can be combined there as well. So there are post payments for health, which is savings. So we've been experimenting with savings programs on this platform, where people can save up, they get a bonus to save up, and they can use that money to pay for their healthcare. Suffice it to say that savings are not the solution for health financing, and this only provides a limited amount of coverage for people. So we look at other solutions as well. So we look at loans, for instance. We're working currently on a loan product, which is an emergency loan product on the system, which people can access easily and that have easy repayment rates. There's an opportunity for groups to risk pool themselves. So this is, let's say, pre-insurance, where you can put money into an account together, into a larger pool together, and use the wallet to extract that money only when necessary for health payments. You can bundle hybrid products, of course, which can be a combination of any of these. You can obtain insurance with loans, so we're also working on that, on loan products, to help people actually pay for their health insurance premiums, because a lot of health insurance premiums need to be paid by people upfront for a certain period, a month, a quarter, a year, and many poor people don't have the ability to do that. So the loans should help them to actually smooth their expenditure on health insurance. And then finally, there's of course just insurance prepaid, where it's fully covered, and this can be done from savings, where we have been experimenting with some offers in Kenya, with the Center for Advanced Hindsight, which is a behavioral sciences lab run by Dan Ariely, on how do we get people to save up for health insurance. Suffice it to say, it's been very difficult, especially with poorer people, to get them to save up. But there are ways of helping people to understand and to keep them on track by providing them with certain devices such as calendars on which they can tick off when they've saved up for their health insurance. And finally, we are working on a proof of concept for remittances in Nigeria. The Nigerian diaspora is large and provides a lot of remittances to the country, and we want to see if we can actually move some of those remittances towards health insurance, so that we encourage, let's say, family members in the UK or the US to pay for health insurance premiums for their loved ones back home. Next slide, please. So for MTBA, just a few results. In total, there are some 4.6 million people on the platform right now. That's a combination of people who save, a combination of people who have been signed up for a UHC, Universal Health Coverage Pilot in Kenya, and private insurance. So you see that there are some 3,500 healthcare providers connected to the system, which is across both Kenya and Nigeria and Tanzania. And then if we look specifically at some programs in there, we are starting a program with Kisumu County for the indigent population. Right now, we've signed up the first 180,000 lives there for the so-called SUPA cover, which is the NHF product for the informal sector. That will be doubled within half a year's time for the rest of the indigent population of Kisumu County, and is a model to help the county achieve universal health coverage, and hopefully a model for the country. The president announced that a new UHC initiative last week, which is with NHIF and with the county. So we think that this initiative fits very nicely within there. In Kenya, there's also private insurance on the platform, where AAR, which is a large private insurer, has put the first 55,000 people onto the platform to manage that entirely digitally and entirely through the mobile phone, which is much easier for people to use, and which lowers the cost of administration for AAR tremendously. It can go down by 10-20% within a year. There's of course the people registered for the UHC pilot. This was in 2019. This pilot ran in Kenya, and we assisted NHF and the counties and the Kenyan government in registering 2.6 million people to that to the platform for this purpose. Now, as I said, in Kisumu County, there's a new initiative has come out of that, and we are expecting that we can now use this whole registration exercise for the new UHC initiative that's being started in Kenya. And then more recently in Nigeria, the Lagos State Health Scheme and the Kwara State Health Scheme have started, have commenced. There's still early days. There's about 225,000 lives on that, but these are in principle mandatory statewide health insurance schemes. Well, looking at Lagos with a population of over 20 million people, that shows the potential here. Next slide, please. And finally, I want to talk about the health risks in this area. This is a very simplified version of the health journey, which we all now and again follow. We are healthy. Hopefully we are healthy most of the time, but sometimes we fall sick. And when we do, we sometimes need treatment. And when we've sought treatment, we need to recover, or we need to manage the disease that we are suffering from. And so in these areas, there are also opportunities that we are working on to manage the risks. So when people are healthy, there's a need to manage health risks by helping people to prevent sickness and ill health. And that can be done in several ways. We've been within the whole COVID pandemic, we have been using SMS in Kenya to provide people with information, preventative information on COVID. We're also working on a solution for more expansive online health information to help people remain healthy, or if they do fall sick, to have a first understanding of what it is that ails them, and possibly also help them find the appropriate health financing. When people fall ill, then we are looking at triage tools that will give some symptom assessment, or more specifically use digital tools that help to diagnose illnesses. So we've been experimenting with connected diagnostics on malaria and brucellosis, which is a system whereby an automated test is done of a drop of blood. This the results of this test is shared with the healthcare provider, but also through the MTBA system with the healthcare payer. And this is then automatically, if there's a positive test, there's an automatic payment to the healthcare provider for treatment. Then there's a teleconsultation when people are seeking treatment, which is a way of helping people to easily access healthcare. We're experimenting on a very small scale with that, but we see that certainly in COVID times, there's an increased need for some assistance at a distance. But I most specifically want to mention the last box here, self-management, monitoring and management there, where we have been experimenting with management of NCDs in Kenya by providing people with access to the tools to measure and manage their own hypertension and diabetes. But in this area, we've also provided within the COVID pandemic a service called COVID Connect, which is a way for people to track their symptoms and share those with qualified medical personnel in Ghana, in Nigeria, and in Tanzania. Okay, that is as much as I want to share today with you. Thank you.
Great, thank you so much, Sicco. We have answered quite a few questions already, but perhaps, Sicco, there are a few that have come in for you that I can start with, and then I probably have a couple of questions for all the panelists at the end.
Sure.
So one question is from Ananya, and he's asking, is there any appetite for health insurers to offer installment payment options to clients, perhaps on a monthly or fortnightly basis, to prevent them from needing to obtain a loan?
Yes, I mean that's of course the big thing. If people can pay their health insurance in smaller amounts, then that helps them to remain enrolled in health insurance. The issue, of course, is that people have a lumpy income or irregular income. That means that there are periods of the year that they cannot even pay the small amounts that they may have to. contribute, and therefore you need to have some instruments to smooth that. So the instruments can be loans to bridge a period in which people just do not have the money to pay for it. But it's a very complicated area, and there are also people who are so poor that they cannot afford to pay any type of premium, whether you provide loans or not. So there needs to be solutions for that as well, which is why we work with governments to cover indigent populations. People really just need the support.
Okay, thank you. So just for participants, Nikhil and Renee have answered a number of the questions that were posted to them. And if you want to look at the answers, you can go to the Q&A box and then go to the answer tab at the top, and you'll be able to see the answers that they've provided. So we won't go over those questions right now since you already have their responses. So I'm going to ask you like 3 questions together, and then I'll have a couple of questions for all the panelists. So one is from Gilles. He's asking, could you say a few words about your partnership with Britam in Kenya? And then 2.
Sorry, go ahead. Yep.
Yeah, this one post all 3 together. And 2 from Gift. One is, does your product sit on a USSD menu or a mobile app? And then what has been your experience in terms of what is the appetite for telcos to take up mobile health wallets?
Good questions. Let's first start the technology. That's the simplest one. MTiba works with USSD on the client-facing side and works as a web portal on the provider side. Obviously, with the increase in mobile phone or smartphone usage, I should say, in Africa, there will be a need to start providing client-facing applications as well to make life simpler for everyone. For Gilles, hi Gilles, good that you're here. The Britam partnership is between CarePay and Britam. It's not something that involves PharmAccess. So I will need to really guide you towards someone at CarePay to answer those questions. CarePay, by the way, is the company that develops and runs the MTiba platform, and who are responsible for its commercial success as well, while PharmAccess is an NGO, and so we focus on products and services that are aimed at the low-income groups. And the third question, I just forgot, sorry, Aparna.
I think you answered, so one was a USSD, sorry, now I have already kind of, what is the appetite for telcos for mobile health wallets?
Well, that's difficult to say, I must admit. We have a close partnership with, together with CarePay and Safaricom in Kenya, and the appetite there is very clear. Safaricom is extremely happy with this product and promotes it around the world. It even receives prizes for it. But that's one case. So if we say, what's the appetite for telcos? I think it's something to be seen. There are developments in Nigeria at the moment with the platform, but there, of course, mobile money is not as prominent as a place like Kenya. So it's early days.
Okay, thank you. So there was a question for me. Let me answer that first. So the question is, to manage covariate risks, what is your insights on including climate or disaster risk insurance with government social protection tools, and how ILO can play a role in this regard? So our kind of philosophy has always been that, if there are government programs, the private sector needs to either complement them or provide either services or supplementary risk management tools. And so when we're talking about risks that size of climate and disaster risk, and Philippines is a great example here, so maybe I can ask Renee to jump in as well. What kind of role the private sector can play will depend on, again, what government programs are available. So Rene, maybe if you would like to talk a little bit about, the climate risk and agricultural risk insurance that you're trying to offer through clients versus what is offered through the government.
Okay, thank you, Aparna. Currently, actually, crop insurance is also a concern in the Philippines right now. That's why we have talked with clients on the development of the insurance for crop, because we have the Philippine crop insurance, but there are actually a lot of concerns. That's why we try to talk with clients to develop a program or an insurance that will cover the crops of the farmers. That includes corn, cassava, and even palay. We are still on the negotiation right now as to the development of the product.
Okay, thank you. So Lucia has a question which kind of goes back to the risk management framework that I had presented earlier, where we are talking about, in addition to the coping step, we have the prevention, preparation, and then coping mechanisms. So her question is, do you, and I think this was for Sicco, but I would actually like to pose this question to all three panelists. So both from OIC, KGFS, and PharmAccess, how do you help implement strategies to reduce the impact of future risks? Example, how do you help clients lead healthier lifestyles, for example, so that they reduce their chances of landing up in hospital? So this is just related to health, but there might be other prevention strategies that you have to help clients cope with, to better kind of prepare for other risks that they're exposed to. Maybe Nikhil, start with you, and then Sicco, and then Rene.
Yeah. So yeah, Aparna. Yeah, if you ask me about the risks alone, yes. As I've told you, we operate in remote rural areas or Type 5, Type 6 towns, villages of India. So where people are aware about what are the risks that might come on their way for the household as such. Yes, but they look at the affordability also. I mean, to a large extent, to what extent I'll be able to go and purchase a particular policy which is going to mitigate that risk. And at the same time, there are a lot of effort from the company from KGFS as such to educate the customer on the other risk aspects also in life which they might face in the future. And we are also proposing other products also to the customer which I have not mentioned in my presentation under DSSP. I mean, there are other factors also. We offer crop insurance, we offer the cattle insurance and all, which takes care of the other risk which the rural household faces, or even we are identifying certain things which might come in the future also, and we will be plan to do some research on that, market research on that, and to understand to what extent customers would like to accept those products, provided again if they are affordable. So that work is always on.
Thank you. Sicco, you talked a little bit about this on your health risk management slide. Is there anything else that you would like to add here?
Yeah, I mean, prevention obviously is the gold opportunity in health. As insurers or NGOs or other non-public institutions, there's a limited amount you can do. Obviously, there's huge impacts on health from sanitation and from improved housing, which are things that are outside of anything that we can do. So what we do is that we focus with prevention mostly on the one hand within the healthcare itself. So a good example of that is a product that we have developed called Mom Care, which helps to track the mother's journey during pregnancy, so that during an antenatal care visits, the appropriate care is provided and the appropriate tests are done, which minimizes the risks and identifies early the risks to pregnant women when it comes to their delivery. So that's the one side. On the other side, we are experimenting with online health information. Right now, working in Nigeria and in Tanzania on that, where we want to provide people with information on how they can remain healthy and what they can do once they do fall sick, so that they are better prepared and take better charge of their own health.
Okay. Rennie, any last words? Because I think we need to close soon.
I will share to you about our health programs for the members. Maybe this would help because in our cooperative, during General Assembly, we provided laboratory examination free for the members. Now, based on the result of that laboratory test, we found out that our members are hypertensive, and then part of our program is to help them, and we do we do monthly at the health forum that the topic is like example hypertensive, heart attack, diabetes. So we do that monthly at the forum to the members. So maybe that works because some members actually are not conscious about their health, because previously it is very difficult to convince people to undergo a diagnostic exam, except if they are sick. But if they are strong, so they will not actually have that. So maybe that helps in a small way, because prevention is better than cure.
Okay, thank you so much. I would just like to thank all the three panelists for taking the time to present your experiences today in a very transparent and comprehensive manner. So thank you so much. And now I would like to hand it over to Dirk to close the session and introduce the next one.
Thank you, Aparna, and sorry for being so picky on the time, but the next session will start soon in 30 minutes, and we will be talking about how digitalization can spur market development. We have talked about that also during the last days, especially around the COVID-19 crisis and what was the impact of that. And many times we heard that digitalization was one of the few positive, but one of the positive impacts. So we will hear about how digitalization can help market development. Thank you, Aparna, for preparing this session. Thank you to the ILO's team in the background, and thank you for the panelists for this very interesting discussions. We will put the presentations online as soon as we get them. It's on the agenda website, and we will also put the recordings online on the agenda website once we have them. So the team is working hard on that and puts it online whenever we receive it. So thank you very much, and see you in the next session. Bye-bye.
Thank you.
Thank you, everyone. Bye-bye.
Thank you. Bye. Thank you so much.
Thank you.